Welcome back. This is Thomas. Earlier, I did a video on how Bitcoin dropped from 44 to 43, and I'll pop the link to the for that video up on the upper right-hand corner. But let's quickly summarize. Bitcoin was at 44, and then through a liquidation cascade, it dropped all the way down to just below 43. And I wanted to show how that took place in that video. And after, I wanted to find out why. At first, I thought it was the equities market. I'm sorry. At first, I thought it was the perpetual futures market. And so let's take a look at that here. But quickly glancing at this, it didn't make sense. We have funding is negative here, the point where Bitcoin dropped. Funding was negative. Open interest was climbing on both the BTC-backed margin contracts and also stablecoin-backed margin contracts. They both were going up, trending up. The stablecoin margin contracts were almost at $8 billion. And this one was at a high of roughly about 4.7 billion. And so usually, smart money or whales would want to liquidate the shorts when funding is negative. It doesn't always happen, but it can happen because they would take an opposing position and liquidate these people so they can make a profit. But since price was already was up at 44, the only way to do that would be to increase the price up, buy the price up to liquidate them. But price fell instead. So that was an unlikely reason why. And luckily, one of our members on Twitter, LMT, shared this chart here. He didn't say much. He just said NASDAQ, QQQ, and BTC, and showed the chart. And the patterns were similar. So what I did was I dove in a little bit more and recreated his chart or charts, and to see what happened. Oh, let's move that back. So here on the top row, we have the US dollar currency index, the DXY. In the middle row, we have the Invesco QQQ, which is an index of the US 100 companies. And then we have the Bitcoin USD down below here. As you can see, if you didn't already know, the DXY or the US dollar index has an inverse relationship with the stock market. When the DXY goes up, stock market goes down. When DXY goes down, the stock market goes up. And so you can see here the DXY was dropping, and then it was bottoming out and was rising. So somebody in the equities market probably had a margin call where if they don't cover their position, they would get liquidated. So in those kind of situations, what some smart money would do is they would liquidate their risk on asset first. And Bitcoin is a risk on asset for some people, even though some Bitcoin maxis will say it's a risk off. It is a risk on asset for some people in the equities market. So what they did was they liquidated their positions by dumping Bitcoin on the spot market, and supply outweighed the demand, so the price dropped down. That would be the most likely reason why Bitcoin dropped this morning. Thanks to LMT for his chart here and his tweet. Appreciate it. If you like the video, tap on the thumbs up. If you disliked it, double tap on the thumbs down. Click subscribe if you haven't. Click on the notification bell for future videos. Thanks and have a wonderful day.